something you said there was quite interesting to me was the you're talking about obviously expanding the model. And my first thought when you said it was, but you've already said you've got all segments covered. So are we talking here about sort of new exchanges? What's the sort of logistics behind setting up a new exchange for you?
So new exchanges are relatively simple. So it's probably not that. I happen to think that there is room for more exchanges around the planet.
Okay.
But that needs risk centres.
Yeah.
So look, we're not going to set up an exchange in Auckland because simply there wouldn't be enough risk there.
No.
I think Singapore can happen. Who knows down the line, Latin America might have a risk engine. I don't see a lot of them happening. I think Singapore is the one for within the next 3 to 5 year time horizon.
Yeah.
Otherwise, I think having a useful risk centre in Singapore, New York, London makes sense. Tokyo has always been a bit on its own, only for a local market. A lot of us have tried and done very averagely in Tokyo over the years.
And I guess it's very much a yen-dominated market, and in I wouldn't say the current environment, the current century. It hasn't been the most exciting of markets for a lot of people.
And then there's political reasons as well. People don't. It's just it's very hard to move Asia Pacific clients to match in TY3. And actually, there's not that much liquidity outside of yen crosses. So I'd say, look, the big driver I think is actually going to be market data. So this is something we need to work on.
Yep.
Large exchange groups. You see the multi-billion-dollar deals you see on the street right now. They do between 25% and 40% of their revenues in market data. In 2019, my market data revenues were 4%. So obviously I've got room to grow.
Yeah.
That's deliberate. It wasn't like, we've made a mistake. It was just, when you're a certain size, when you're growing, I can't go to bank A or non-bank B and say, hey, will you pay me 30 grand or 50 grand a month for market data? Because it's not that relevant. I think it becomes more relevant as we start to hit the high notes of these daily volumes. So that's a big growth area for us. And then back to your geographic point, the local market data in those 3 risk centres could have a life of their own. So I think for us to become more mature and just a better business, I'll need to have some more recurring revenues that are market data driven.
So we're recording this just a week after what was a new record for LMAX Exchange in FX. 36 yards.
Come on.
26 was the average, wasn't it?
Yes.
36 yards. Always good to get your facts straight. Now, obviously, that did give you a nice boost for February, as it did as it has the market. Do you look at printing days like that as being a real help towards building that market data model that you're talking about? Because obviously, we are talking sort of firm no last look liquidity.
Yes.
Which is, to my mind, the important element of any data has to have that. So does the days and weeks that we've just seen really help you in that quest for market data?
For sure. It gives you credibility. It's important we have that credibility that when we go in to see, bank X, right, non-bank Z, that might have said, look, you're not that relevant to me, David. And sometimes these relationships take 2-3 years to build. Probably my top 5 client today, I promise you, the large bank, but the onboarding process was 2.5 years. So I had to convince them of our relevance. So the high watermark days that's the advertising. Ultimately, this, they always come and say, what's your ADV? And we're always striving for that to get into the 20 to 30 range. I think then at that stage, everyone who makes a price in foreign exchange needs this market data in their pricing stack. 3 years ago, it might have helped you because it's live streaming market data, not snapshot every 5 milliseconds. So it's always helped you, but it might not have been so essential. I think it's becoming essential. It's assisting on credibility, and if nothing else, it's allowing us to have better conversations with people who may have formerly focused purely on last look liquidity.
I mean, you mentioned last look there, and viewers will be delighted to hear we're just about to touch on that one. My sense is that the buy side in particular is becoming noisier and more proactive with its views on last look. Is that a sense you're getting, and Is this just still a few lone voices in the wilderness, or do you actually think it's the start of something maybe changing the debate?
I think it's a systemic change, and certainly it's not just lone random voices. Say like David Mercer in 2012, and people saying, well, what do they do? A couple of the names are the biggest asset managers in the world. It's for them to publicise it, but they're coming out quite vocally. I was very pleased, to be fair though, that the FX committee has added one of the large buy side to the committee, so they're going to have the ear of Guy Debelle and everything else on that when we write the next version of the code. So I think that's helpful. And look, we forget the world we live in, e-foreign exchange, the electronification of everything. Everyone's getting slightly better at analysing their trades and their flow. And they're just saying, I know one of the largest asset managers in the world trades 10% of his flow with me over fixes. I don't see much of it the rest of the time. I need to get better at those other times. But that's because they've analysed it and said, actually, it's cheaper for us to hit firm liquidity, central limit order book liquidity at these times of the day. I want the wider ecosystem to also believe that. So the conversation's changing, and I'm not going to go around banging the drum necessarily. I think the FX industry is a better place than it was 5 years ago. Lots of reasons for that. Part of it is the education of the market, the improvement in the market in terms of technology across everyone, from banks to non-banks, and certainly things like the global codes. So I think it's a better place, and a better place is actually a response time of 100 milliseconds is not reasonable anymore. So we can argue till we're blue in the face about last look and stream firm limit orders, but ultimately, if you want to trade, you want to trade now, and waiting to be rejected 100 milliseconds isn't going to be acceptable.
So therefore, following on from that, then, would you say that the more is one of your more optimistic ambitions, maybe the fact that as people analyse their business better and analyse flow better, that will inevitably lead them towards the LMAX model?
It's entirely it. I think the most credible venues historically, to be fair to them, operated central limit order books, firm, streamed limit order liquidity. So it's not like I invented this, it was there. It's been going for 30 years. The biggest and the best were like that. So, but it is self-fulfilling. And the more guys you chat to, whether it be at a conference, over lunch, over a beer, that say, hey, I'm seeing these guys pop up the stack. The more large banks say, yeah, LMAX were number 2, number 3, number 4 on my stack, the better. The more asset managers say, these guys have cropped up. I said to you earlier, 4 years ago, I can almost guarantee you that no asset manager would have seen me on their client reports from banks. Now they're starting to see it. So it's self-fulfilling. We've got to keep spreading the message and convincing them. All I have to do is convince them it's a more efficient way to trade. If I can't convince them, that's my fault.
I can't let you go without talking a bit of crypto.
Sure.
Volume's up 14 times last year. You mentioned it was a revenue stream that was paying off pretty much from month 1 or month 5. What's your outlook for your crypto business for LMAX Digital now?
So look, I think if you look at all the comparison sites, LMAX Digital is the number 1, sometimes the number 2, spot digital crypto exchange on the planet. That's it. There's ones that have been going for 10 years. A lot of them are retail focused. We're institutionally focused, but we're number 1 or 2. So we've got to maintain that. But look, the job of LMAX Digital and the job of everyone who trades crypto is to spread the word, get the message out there, and make that word make it more credible. There's still this feeling around banks, for example, that it's for enthusiasts and criminals. Right? And that's tough to get over. We need, the crypto world needs the banks, it needs the asset managers to come. And that means that the players in the market, such as LMAX Digital, have to show that we abide by best in breed AML KYC policies. So although we're regulated in Gibraltar for LMAX Digital, we had to, because the FCA don't have regulation for crypto at this stage, we had to apply best in the world AML policies. We have to sign up to FATF. That's it. We onboard you and any other customer exactly the same way we do on our FCA regulated entities. So we need more of that so that it becomes mainstream. Now, I don't know if Bitcoin's going to be the winner or whether it's going to be a digital dollar or something else, but I think certainly we'll all be trading and utilising something that looks like a digital currency in decades to come.
And forgive my ignorance, which is universal on many things. How easy is it to actually add, like if we get to central bank digital currencies, how easy is it to add those to a platform like LMAX Digital?
It's trivial.
Okay.
Like, you need to code to that specific blockchain.
Yeah.
But look, to give you that guide there, we'd obviously never done it before. We know how to run exchanges, we know how to run hardware and software. We hadn't coded to the blockchain before. It took us about a month and a half to add 5 of them. Bitcoin, Ethereum, Ripple, Bitcoin Cash, and whatever the other one is. Ethereum, yeah.
Ethereum. Brilliant. Dave, I don't know if we're going to elbow tap, fist bump, shake hands or kiss.
Certainly not the latter.
No, exactly, yeah.
Thanks, Colin.
Thanks very much for joining us.
Cheers.